is Martin from Secrets, the channel for writing about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at technical charts and try to understand what happened in the market during the day and then plan for a better trade for the next trading day. That's May 9th, Thursday, 2024. It's an expiry day tomorrow, weekly expiry on the Nifty. So today we had a very flat, absolute flat in that sense in Nifty, and indecisive negative close from the Banknifty, and it was very volatile both indices, right? So are we expecting more downfall? Will we have supports? Let's try to understand by looking at the charts. We'll come out with these slides later on, but first the charts. Plain charts. Let's switch off all of those things, and the candlesticks is the first thing that you will try to understand. So this is what is formed. Here we have a small body but a green, green because it gapped down and then tried to move, so it's higher than the close, and otherwise it's absolutely flat as it can be. 22,302.50, the same exact closing of yesterday. So absolutely nothing happened. That's the day. But otherwise you can clearly see it's sliding down for since several days now. So fourth day of down more, sixth day of down more, if you look at that way. Right, so that's the candlestick is not saying much, but it's absolutely flattish close. But here with the Banknifty, you can see that it's a 6th day of selling pressure felt in the Banknifty, and yesterday it was very severe, and today we have an indecisive dodgy, and that below the 20 exponential moving average. So 6 days of downfall. The correction has extended to more than 4% now on the Banknifty and remains flattish 2.65 something from the top all-time highs. Remember, just 4-5 days back we had all-time highs on both indices, and suddenly the VIX is spiked up to 55% the week time to reach 17 from the 10 point something, and here comes all the trouble. That too after we recovered quickly in a matter of 6 days, complete recovery following the poor global cues of due to the war, and immediately war downfall recovery, it made all-time highs, and then seems like election fear was the next thing that caught in the market, and now it seems to be retracing. So if you see the trendline channel, price is it's sliding down from the top. It hit almost at the top of the trendline channel and sliding down towards the bottom, and higher, low would come in at 21,700 levels. That reaches that the higher high, higher low pattern that's being made from the last 23 December on will get screwed up. Hopefully we'll find a support for that and then make the next leg up. So Banknifty actually broke out from this cup pattern and almost hit the 50,000 big rounding number, and then started the retrace, and it's 4.2% retracement so far. Looks like probably there is a cup and handle fan that may be getting formed before it gets enough strength to move further up and break out of that 50,000. So the neckline of that breakout cup is or the rounding pattern is also breached, and you have a very indecisive close. But Banknifty also is in a trendline channel and it hit exactly the top of the trendline channel and then reversed, and it has lost the 20 exponential moving average as well. So the next thing is to look at the support resistance levels. But before that, let's look at the Bollinger Bands. What does it say? Bollinger Bands is absolutely consolidating, right? Contraction is what can be seen. It is indicative of sideways or flattish or no big moves, and sideways movement is what is indicative of that. And Banknifty, Bollinger Bands, they're also seeing contraction, and that's having a bearish bias in Bollinger Bands. Here also, since it is below the 20 moving average, they're also having a bearish bias, contraction, sideways move. Now we'll try to understand support resistances. In the first resistance will be the 22,406, the 20 exponential moving average for the Nifty. If that is clear, 22,500 and then 22,800. That's all-time high for the resistance coming. After that, it will be 22,900 and 23,000. So downside, the first support would come in at the gap, which is still not filled, 22,179.5. And if that gap is filled, then it can fall as low as the 100 exponential moving average, which is at 21,803. But before that, you have the big rounding number of 22,000, which would act as a good support. If that is breached, it can fall down to 21,800, and breach of 21,700 would mean big trouble. Hopefully that won't happen on a single day of expiry tomorrow. It may be absolute consolidation coming days is what I expect. And if you look at the levels, the upside, the first hurdle would be the 49,000, clearing that, and after that 49,500, then the 50,000. Right. Downside, the supports will be, first hurdle will be to maintain the 20 to take out the 20 expression moving average. 48 upside once again 48. 330 has got the 20 expression moving average, so clearing that is the first hurdle. 48, 310, and then 48,500, and then 49,000, and then 49,500, and then 50,000. That's how the resistances go on the upside. Downside, 50 exponential moving average at 47,700 nearby would be the first support that could be looked out, and then 47,000 big rounding number, which is in confluence with the 100 exponential moving average, will be the support that can be seen at downside. So today it managed to just close on the 20 Fibonacci retracement level exactly on that. So it has breached that, but seems like it has taken a support there. So right now for the Banknifty is at 40,000. Maintaining that will be pushing. Now that we have seen the support resistance levels, let's also see the resistances and support levels for Nifty for tomorrow's expiry. So the highest resistance here at 22,800, and highest support would be 22,000. So market may move, but it's having a bearish bias since the PCR is 0.58, and we have short build up today. So we actually had a long build up on Banknifty. So prices here at the 22,400 level. So we could manage to take out that 22,500 or maybe the 22,400. So 22,400 is not maintained tomorrow with a gap down or a gap or a downfall. Then 22 is what we are looking at. If that is breached, it could easily go down there. But if the 22,500 is taken out, it can. So I think 22 and 22,500 would be where the battle will be, rather than 22,000 and 22,800. So won't go as far as 22,800 in a day. So it will be the 500 points that will work. The thing will be happening. So let's just quickly wrap it up. What happened today was absolute zero. But we're in a 34% of rally, 5% retracement, and market was exactly 22,300. Today was a gap down, then attempt to move up, and then selling pressure, and then finally closing. Kind of absolute flash. Banknifty also the same, it gap down and then tried to recover, and then could not face the selling pressure, and then finally closed absolutely flat. And this is the doji candle with negative 264 points, or 0.5% more. Now it is maintaining that 42,021 levels we already discussed in order to beat that. So if you try to put in the different parameters in favor of the bulls and the bears, higher high, higher lows still not breached. Well, the band still not having an expansion in the downside yet. It's still sideways. Sectoral indices are red, but momentum is either bullish or sideways, except for the IT, which is in bear zones. Heavyweights are red, but red on most, except for the Lands, ITC, and Kodak, which managed to close green. But the fact is that the momentum in the short term still sideways or bullish, and not into exact bear zones, except for the Lands and the Infi. Those are all greenish itself. Heavyweight stocks are those stocks that contribute maximum to the dice. Sectoral indices, all the major 5 sectors like the FMCG, realty, metal, IT, etc. Now, crude oil is also cooling off. 12% of cool has happened, so it's 77.5. It's a relief in an oil importing company like ours. And US indices also flat is green after 3 to 7% of retracement in Nasdaq, S&P 500, and Dow Jones indices, which could lead to a potential reversal after having corrected some 6 to 8% earlier. Retracement has happened. It is trying to reverse and move up. So if the retracement has found its bottom and the reversal happens, and now once again it's heading towards all-time highs. So it happens, it will be good. Otherwise, it may back the market. So what's in favor of the bears is the fact that the candlestick patterns are all like 6 days of downfall. Yesterday had a big fall in the Banknifty. Weekly candles are all having weekly shooting star patterns, double top on Nifty, and all this are creating bearish on the short term. Bearishness in the short term is slowly coming in. And the expression moving average support value is also breached. The ultimate pattern is seen in Nifty is negative. So I also at the moment in the short term has slipped to the sideways, not in bear zone, but it's slipped to the sideways. It was in the bear zone. It was in the bomb the bullish zones of the RSI about 60 just few days back, and now things have turned. But both the indices have lost momentum, and the ADX indicators are also close to the bear zones, Demat negative zones, and both the indices. India VIX has been spiking crazy, 55% from 10 point something to 17, and today also it was positive 0.5% up more. So it's 17 is where the VIX is something to be cautious about. Probably that's the fear and greed that's mounting up because before the pre-election or the exit polls and all that. So we'll be cautious about that. Dollar is showing some green on about 5.58, and rupee remains to be weak above the 83. Gold is having flat green. Some pull off has happened, but it's not very far from the all-time high. So we'll be cautious of the fact that if money is getting shifted from the equity market to the safer havens like gold, the hedging instrument. So Fyers has been selling like crazy since the entire last several years, and especially the entire April month is 50,000 crores of cash selling has happened. Yesterday they were selling crazy like 3,668 in the cash markets. The selling is severe, and that has been there, and probably that will stop by the interest rate hike or some news like that. But until then, it's only the mutual fund in India money that's flowing in and holding the market. Foreign money also has to be there, until then we have worries. So what do we conclude? We have a very volatile market, just ahead of the poll outcome. It's another 15, 20, 30 days, and we have the new government, and market is slightly worried about that. This is what it looks like, and you have it down for retracement of 4.5% on the Banknifty, and flat is close, indecisive close, and all this selling pressures in several days. Breakout, it's now into consolidation, but still the higher low patterns are maintained. Both the banks indicate consolidation. Momentum has dipped to the sideways, right? That's consolidation that's happening, and the probabilities of the rally extending cannot be rolled out after it finds some support before the higher lies are reached. But at the same time, have the probability of this reversal extending further, and then breaking, if it is breaking down the higher low patterns on the indices, and then losing the momentum of the bear zone. So if that happens, we have to be cautious. So anything could happen. Right. So option traders, now there is a major event, the VIX spikes up, and market will be very violently volatile. So you have to stay out is the best trade to do. If you're an investor, I will did provide the opportunity for you to invest in the market, the long story. Right. But in SIP mode, small chunks in quality longs, long-term investment stocks along, and this may be the time for that. But the traders, you need direction. You don't have direction, you should have confirmation of sideways movement. Market is sliding down. You have to keep a close watch if this sideways remains for a down direction trade, or would it turn out to be expansion on the downside. So if there's expansion on the downside, you can place your bets on the good side carefully, because the market's in the bull rally. So this is a time to be very cautious. VIX is rising about 60. That's it. Now tomorrow have a weekly expiry levels we already discussed, and PCR and all that. So it may be probably 22,000, 20,500 that action may be happening, although the OI is bearish and the levels are more wider than 800 point wide, but it may be actually 500 point wide, or at least what I look like. Yeah, that's all. Always hedge your portfolio. Have stop losses, portfolio level stop losses, portfolio level exits, manage your risk at portfolio level, and also at every trade and every position that is taken overnight on these days has to be completely hedged risk to match so that you still stay in the market another day. Thanks for watching. Happy trading, happy learning. Bye bye.